Welcome back to Alex Lavender on YouTube. And Alex, the people want to know, what is the best mortgage for 2026? A fixed mortgage or a variable rate mortgage?
Yeah, I mean, that's a great question, Mark. It's like saying, is it better to get a gas or a diesel car, right? So they're both similar in certain aspects, and very different in other ways as well. You know what? It's not a one size fits all for everybody. It really comes down to the specific person and what you're looking to do. Because some have advantages, some have disadvantages as well. And if I had a crystal ball of where rates were going, I probably wouldn't be here. I'd probably be in the, stock trading floor or something, predicting where all those markets are going to go. So it really does depend on the person. And I think that that's why it's more valuable now than ever to talk to a professional who can walk you through those and go through both those scenarios because there's pros and cons to each for sure.
I know most people that I talk to, they hear, hey, Bank of Canada drop the interest rate. And immediately everyone thinks, oh, my mortgage is going to be a little bit lower next time I renew it.
Mhm.
But that's not exactly the case, is it? Can you explain how the fixed rate is set and how a variable rate mortgage is set?
Yeah, common misconception for sure. So variable rates are based off of the prime rate. So you get a discount or a premium off of prime. So like let's say you get a discount of 0.5% off of prime. Today prime is 4.45. That would make your rate 3.95%. Whenever prime changes, your rate follows it at this discount, depending on where prime goes. And prime is directly correlated to the Bank of Canada overnight rate, which is the announcements we hear from the Bank of Canada. So variable directly influenced by the Bank of Canada announcements. Fixed, not really. To some degree, maybe, but if there's a Bank of Canada announcement where the rate drops, it could be a week or two before you see a fixed rate drop, or fixed rates could go up. So they're really not correlated together, at least not right now. And for fixed rates, they're based off the bond yield market. So in a sense, they're kind of tied to the stock market. So much more tied to information that comes out, such as jobs reports, the inflation information, unemployment info, GDP. So these things really move the markets, and that moves fixed rates really quickly. So variable really can only adjust, 8 or 9 times a year when we have these Bank of Canada announcements. Fixed rates can change every day until you have it locked in for the term of your mortgage.
And right now, rolling into the beginning of 2026, what is, giving people the better interest rates or the lower payments right now? Is it fixed or variable?
For the most part, it's variable. Right now, variable is a bit lower than fixed. It depends on a few factors, whether you're buying a rental property or an owner-occupied home, what your down payment is, etc. But for most rate categories, variable today is lower.
But then the downside of variable is that, as again, you just mentioned, it could change like, 8 times throughout a year. So who would be your ideal candidate that comes into you for a mortgage that you would say you should go for variable? What does that person look like?
Yeah, so you said it's a downside that the rate can change 8 times a year. That could also be an upside as well, because if rates go down, your rates are going to go down as well. It's just that it's not fixed in. So it could go up, it could go down. It could be better, it could be worse. So an ideal variable rate client, let me just think of some main ones that come to mind. Someone that needs to have flexibility in their mortgage. So a lot of the times I'll have clients that are like, hey, you know what, I'm going to sell and in the future. It's going to be like 1 to 3 years down the road. I'm not 100% sure, not even 100% sure if I am going to sell. Variable's great because the penalty is always defined as 3 months of interest. So it gives them a lot of flexibility to get out the mortgage at any time, and they know exactly what their penalty is going to be. Fixed, it's not the same. It's a different calculation. It can be a lot higher. Also, with variable, you can switch over to fixed at any time without penalty. So, that was valuable in the end of 2023, early 2024, when rates were, in the 6% range and they were just starting to come back down. So a lot of clients wanted to pick up on those rate decreases that were predicted. And then when it goes in at the bottom, they can lock it in. And Also with variable, there's two types of options. You can either do there's different terminology. One's called an ARM, which is an adjustable rate mortgage, and one's called a true variable. With adjustable rate mortgage, your payments change. So the interest rate changes, your payments change. With variable, the interest rate changes, your payments stay the same. So that can be valuable. So that even gets a little bit more intricate because that is maybe a better solution for someone who wants variable but wants to have fixed payments, such as someone who has a rental property, for example, and they want to have that payment stability. So within variable itself, there are two options too with the type of payments, but yeah, I would say for people that need to have a lot of flexibility, variable is a great option. And historically, before the last 5 years of craziness, if we look back to 2020 and before, variable did historically outperform fixed as well.
I know you said you can't really predict the future, but if you were, where do
Mhm.
you see interest rates headed from the Bank of Canada, which means variable rates? Where do you see them headed in 2026? Are we going to trend a little bit lower, stable, rising? What do you think?
Yeah, so I don't make any predictions myself, but I do closely watch the economists of the big five banks and where they predict rates are going, and that's what I follow, and that's the advice that I give to clients. And it looks like a lot of stability right now. Oh, so the outlook is currently till the end of 2026. We have some of the banks predicting about a quarter to a 0.5% decrease by the end of the year. A couple other banks are predicting that rates are going to maintain the same. And I believe we have one bank, which is Scotiabank, predicting a 0.5% increase by the end of the year. So, I mean, if you kind of average that out, it looks like stability. So I would say that rates, at least on the variable side, are probably going to maintain where they're at, with the potential to fluctuate by 0.5% up or down. But we still do live in a pretty volatile environment with, our reliance and what is going on in the United States and, some stuff over in the Middle East as well. So this can change really quickly. And this is just a prediction today, but we've seen a lot of these predictions adjust, and they change quite quickly too with what comes out and what happens in the world.
And now what about the fixed side of things? So who is your like ideal person to get a fixed mortgage in 2026?
So fixed is for people that really want to have the payment certainty and are also very risk adverse. So if you really don't like risk and you really just want to know what your payment is and watching the news scares you, then fixed is probably a good option. I also think fixed is a good option for first-time home buyers as well because it just gives you that payment certainty. I think there's a lot of variables with owning a home for the first time that can come up that you're not aware of, such as, big property tax adjustments, the first year or two that you've bought it, unknown things going wrong and not realizing how expensive they are, like a roof replacement or a furnace, or some crazy things like, if you've ever had to have some of the water lines or sewer lines ripped up in your front yard. I mean, it can be tens of thousands of dollars. So I think that for first-time buyers, there's a lot of pros to having that payment certainty, especially when you're putting 5% down. I mean, hey, if someone's putting 20% down and they have, a couple hundred grand in the bank, maybe not as big of a deal, but a lot of people we're seeing are using every last cent that they have to buy this home. And I think in those scenarios, that payment certainty is like, what your payment is, and you don't care where interest rates go. It's just like, I know exactly how much I have to pay for the next 5 years. I think that's really beneficial. Also, the same for people in retirement as well, where they're on that fixed income. They want to have that payment certainty. I mean, like I said, with variable, we can have fixed payments, but that fluctuation can still throw things off. The biggest thing with fixed, and the biggest thing that I always ask as well, is whether you're doing a 3-year term or a 5-year term, like, do you plan on making no changes to this mortgage and living in this home for the next 3 years or 5 years? And if the answer is yes, then it's good to kind of follow with that strategy as well. If for any reason they think they might break it, then I think it's a better idea to maybe look at something more flexible or shorter term to match what that outcome is.
Hmm, that's very interesting. I remember when I bought my first house and we knew we needed to get the roof replaced when we bought it, but it ended up being like, I think it was 16,000 or $18,000 on top of the mortgage and utilities that you already planned for and budget for. And like speaking from personal like case, like if I also had my variable rate mortgage that was like growing and getting more expensive every month, it would have been like, you're getting a double-edged sword basically, right? Cut on both ends of it.
Hmm.
So I think as a first-time home buyer, that makes a lot of sense to recommend a fixed rate because you just don't know what like the cost of ownership actually look like beyond the mortgage and utilities. So
That's
yeah, that's
very
a great
true.
point there. And then let's talk about any sort of like other factors. Like, does do people have a easier time getting approved for a fixed mortgage or a variable rate mortgage? Is there a difference?
A- At times, there's a disparity, and it's not too bad right now, but the stress test rate that you qualify mortgages at is 2% above the rate that you receive. So sometimes for someone to qualify, if they're fully maxed out, they need to take the lowest rate possible. And if that today is a variable rate mortgage, then that might incline someone to go into a variable rate just to be able to actually purchase the home. So so that is kind of one thing. Other than that, no. You know what? The lenders don't really build in anything like, hey, if this person has variable, their payments are going to fluctuate and maybe that's higher risk. That's not factored in at all. It's just the rate plus 2%, whether it's variable or fixed, doesn't matter. So I would say no, it doesn't really impact the ability to qualify.
Okay, got it. And if you have any other questions for Alex on fixed or variable rate mortgages, leave them in the comments on the video below this. And we'll be sure to talk about it in the next video, which means that you need to subscribe to Alex Lavender on YouTube if you want to get more awesome content like this. And if you still need help and you want to work with Alex and help and let Alex do this application for you and get you multiple options from multiple lenders in from fixed and variable rates, then use the link down below this video and get started with your mortgage with Alex.